concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
We're going to get the latest now on oil exploration and production from our chief equity strategist, John Blank. He joins me via Skype from the West Coast. John, you are talking about an area here that has seen nothing but analyst upgrades lately. Why is that?
Terry, it's all about the oil price, WTI oil price. We all know that back in February it was at $27 a barrel. Now it's at close to 50. With some retracement to 45, what you see when that type of move, an 80% move in price, is analyst earnings, no matter how long they've gone down, are going to go back up. And so analysts, and we're talking about 250 analysts across 95 companies, have all been upgrading the E&P earnings estimates on this price cycle. So that's getting a Zacks rank for many, many oil companies, exploration production companies in particular, that's telling investors to go ahead and buy these shares.
So the Zacks rank, if I'm reading correctly, is number 7 out of 265 right now?
That is correct. Number 7 out of 265. So you're saying to yourself, John, how could I stay away from this sector, this industry, these sets of companies? These look so hot. My point here, Terry, is a cautionary one. This data is coming from a public price, and we all know what's happening, and there's no negative revisions. There's no differentiation among companies. This news is fully priced in. These stocks have already run up, and this is one Zacks rank signal you should not be paying attention to.
So as far as the price of oil is concerned, though, do you still look for that seesaw effect going on with oil prices?
Absolutely, Terry. I think we're going to range trade between $40 and $60 the rest of this year. So now we're at 45 today. I can see us going down 42, 41 at some point, and then bouncing all the way back up above 50 for a run into 60 in the fall. But what all this is telling you that there's going to be some time in a few months where these types of stocks get a pullback, and that will be when you want to load the triggers on all these types of stocks.
All right. Well, speaking of stocks in this area, which ones do you like?
Yeah, Terry, there's 3 what are called pure play stocks. These are stocks that sold off their refining and gas stations about 2 or 3 years ago before this whole thing rolled over. But nonetheless, these are some you want to look and keep track of into the fall. ConocoPhillips is one name I like. Another name is Hess Corporation. And the third name is Marathon Oil. And this is a company that has a subsidiary of the gas station. And we want to make sure that you look and differentiate one from the other. But Marathon, Hess, and ConocoPhillips are all good E&P plays that are going to be showing up on your radar screens as Zacks rank number 2s. And you want to wait on this one until the fall, and you get a pullback in oil.
All right, John, thanks for that. There you have the lowdown on oil exploration and production from our chief equity strategist, John Blank. With John, I'm Terry Ruffalo.